Welcome. In this video we're going to look at the opening balance sheet or OBS tab of the Compassheet model. In this tab it puts in the snapshot at the start of the forecast, in other words the opening balances of where you start. This is important because it gives you what you're owed or what other people owe you at the beginning of the forecast, which feeds through particularly on the cash side of things. And where you start determines where those cash inflows and outflows are from the starting position. Important to note the date of where this starts, so it's not where you are as at the point that you're inputting these, it's the date of where the forecast starts. So you might be doing it for starting in a month or two's time, so you're trying to estimate where you'll be when the forecast starts, or it might be that you're starting for a month or two's actuals that you're putting in, so it might be you're putting in those actuals from a month or two ago. So it's the date where the actual forecast starts that you're putting in these numbers from. So at the top of the sheet are the fixed assets. These are things like fixtures and fittings or plant. If you're wanting to do the forecast purely for a cash point of view, you don't have to put anything in here. If you're doing the forecast for funders, or if you're looking to get a loan and things, we'll expect these to go in because these will feed through to the balance sheet at the end. However, if you're kind of confused or don't understand these and you're purely doing it for a cash point of view, because it affects depreciation, which isn't a cash item, you could not put stuff in here. But for a complete model, I would recommend that you do. So at the top here you have facility to put in up to 5 different categories. These are pre-populated with the most common ones, but if you wanted to change them, you can click in here and put a different type in. So if you wanted to rename that as property, for instance, you can do. And that will feed through the rest of the model. Next line down is what the cost is. So this is what the amount you originally paid. You often find this from the accounts. The best place to find these numbers from and get your starting position is running off a balance sheet from your accounts. You might have Xero or QuickBooks or one of the sort of more common accounting packages, or your less set of financial accounts, and update those. So that's a good starting point for some of these numbers. So the cost, put in there. Depreciation, that's the amount that's written off. Put that in as a positive number because that will take it off to get down to the value that's down in your accounts now. So if we put 50,000 in there, for instance, it'd take that off the £100,000 cost. And so on. So you can put that in for any of those categories in there. Stock, that's the value, that's the cost value of the stock that you put in. What we've got on each of these, try and make it easier, because this is perhaps the most, I wouldn't say complicated, but the most challenging in some ways for if you haven't got a finance background or understanding, is a translation. On the left hand side is what you might find it in the accounts. On the right hand side is what you might understand it as. So trade debtors is if you're running off your balance sheet. On the right hand side is the explanation of that's what's owed to you by your customers. So in here is £20,000 is what we estimate the customers will owe us at the start of the forecast, and that then feeds through into the payments terms. When we looked at that, saying that there's £20,000 owing at the beginning of the forecast, and when do we estimate that that will be paid to us. So the VAT, if it's in the top bit of the box, it's the amount owed to us by HMRC. If we go down here, if we owe HMRC, it's down as a liability. In other words, we owe somebody that money. An asset is what's owed us, a liability is what we owe somebody else. Prepayments is where we've paid for something in advance. So that might be, for instance, rent or other items that we've paid in advance. Other debtors are other amounts that's owed to us. So they're not part of our normal customer debts, but it might be other amounts that are owed to us. Directors' loans, this is where the directors owes the company. And if we've got cash in the bank, so a positive cash balance, put it there. If we've got a little bit of cash, so a bit of petty cash in there, and then an overdraft, net those two off. You can't really have a figure in there, have a cash in bank figure and a negative figure. It's one or the other. So net those off. So if you've got £1,000 cash and a £20,000 overdraft, put a £19,000 overdraft in there. Existing loans, the facility to put up to 5 existing loans in there. This is the amount owing at the beginning. Invoice discounting, if you use that, that's the amount owed to the invoice discounter. With any of these boxes, if there isn't anything, just leave it blank. Pay as you earn an NI. You could log on to your HMRC gateway, have a look at that. Same with the VAT. Crude expenses are amounts where you've not received the invoice yet, so you know you might owe a supplier an amount, but you've not received the invoice. Other creditors are other amounts owing. Director's loan is where you owe, where the company owes the director the money. And corporation tax is where you owe HMRC. If you've got some R&D tax credits owing to you, put a negative in there. When that is paid to you or you pay it, goes into the tax assumptions tab. At the moment, all we're putting in here is what the balances are. Feed those in. Share capital and reserves. Generally, these are the figures that balance it off. From an accounting point of view, these two figures should balance. If they don't, a little warning comes up telling you that they don't balance. And then you've got the model, and that completes how to fill in the opening balance sheet tab of the Compassheet model.